Hey, sure, guys. Welcome to another episode of the Rebel FX Club. Where I'll be doing my analysis from 0 to 100, from A to Z. Basically, here we're going to be focusing on the most important aspects of analyzing indices because now it has become a popular thing. Most people are now trading indices. So, without any wasting any time, let's jump straight down to the chat. Okay. Basically, guys, here we're going to be focusing on a few things. Okay, in being a predictable trader. So obviously we had the so basically before you can even jump into your chat, one thing that you have to understand about yourself is whether you're a scalper, whether you're a long-term trader. Basically, I would advise traders to actually be swingers, because basically swinging, it comes with a lot of advantages. You're on every trend that the market actually takes. If the market decides to do an passive movement downtrend, you're on it. It decides to retrace, you're on the retracement. Basically, you're just on trends of the market. Every trend of the market, you're gonna be on it. Basically what I'm actually talking about, it's in this case, if you are a swinger, you're going to be on this uptrend going all the way to the upside. And if you are a swinger, you're also going to be participative on that downtrend that we actually had there. So without any wasting time, let's jump down to the chat. So basically now, as you guys know, that we have day traders. Actually, we have a lot of types of traders. Basically, the type of trader that I am, I'm a swinger. There are some days where like I don't trade, and I'm just gonna focusing on the trades that I'm already at. So basically, me as a swinger, my best time frames that I would normally, most traders actually start from a daily time frame. I start from the weekly time frame, because now when I start from the weekly time frame, I understand it much better. It doesn't matter where you actually start from. You can start from the daily, take your trades on H4 or H1, and just hold the trades for days up until the trend is over. Doesn't matter where you actually start from. And then now, for those who are day trading, they know that they have to start from the daily time frame, go to H4 and H1, 30 minutes, whatever. Whatever that's actually working for them. That's the method they use. So basically, me as a swinger, just like I said, I'm gonna be starting from the weekly time frame. Okay, I'm gonna be starting from the weekly time frame. I'm going to the chat. I do when I get to my chat. So now, basically, now this is the knowledge that I've taught for so many years. And when I started trading, this is the first knowledge that I actually fell on. So basically, the first thing, that drawing lines everywhere this indice actually fell down. Where the trend actually started. In this case, what I'm going to be doing, I'm going to be drawing. So I've named this weekly turning. I call it the weekly turning points. So I have my highest point. I'm going to also draw my lowest point. Which mean I'm going to be hitting those other ones everywhere where this indice actually turned. My students know that there's a certain manner that you actually have to know you draw these lines, and there are certain numbers where you draw these lines. So you can't just draw everywhere. Okay, so basically in this one, the one that I've just drawn, you saw that this thing actually, let me change the color of this so that it makes sense and you guys can be able to see. Yet acted as a resistance, came back to act as a support, acted as a support, acted as a resistance. If I zoom in, you can be able to see that. So now this is where this is actually coming from. But then doesn't matter, not necessarily that it actually tend. That's where you're going to be drawing a line. Yeah, the market tend went to the upside. With this one, yeah, the market tend went to the upside. You get, so basically, and also this one that I've just recently drawn, of which is this, it also applies it, because now the market actually tend there and then it went to the upside as well. Okay, who can be able to draw these lines? Here as well, the market actually actually turned. So this one also as well, it applies. The market turned, they went to the upside. The market actually came back to turn there again before it actually continued going to the downwards. So basically, it works. You can do as much back test as you want. It always avail. It always show you. It always show you. You want to understand why am I actually drawing this? Makes a lot of sense. So basically, I'm not gonna draw this one. Just so now, if like I zoom in, you can be able to tell that okay, this guy actually drew a line here because the market turned there. It makes sense. Yeah, this is okay. The market actually turned there. The market actually turned here, hence I draw that. It also applied so many times they saw that. Yeah, I'm not gonna draw it. It doesn't bang. I feel like this was a liquidity collection area, of which now here I can just use it sort of a trend line, something like that. I don't know. You get me? That would actually apply. Yeah, I'm not gonna draw them because now if now I draw them, they're gonna be so close to each other, and I don't want to confuse all guys. So I'm just gonna leave it as it is. Yeah, the market actually turned, also turned there again. So yeah, I feel like this is all. Let me just fix this very quickly. Let's see the market didn't actually, of which I can draw it here. But here, this is what I have. But then before you can understand of price, you actually have to understand price in order for you to actually to be able to take those trades. Here the market actually turned and it created that huge move going to the downwards. This area here, it was an area of what? It was an era of strong demand. Reason being, as we saw the market actually when it came back here for the first time, it actually went to the upside. But then here it didn't have enough momentum to actually push the market all the way down to break all-time high. So, but then now, if you can look at it, the market ended up actually what? It actually ended up breaking below this era by this candle, and we saw the market actually push all the way downwards. Now, what is the other area of demand that the market actually needs to actually reach before it actually can actually go and break all the all-time high? This area here, it is an area of huge demand. Reason being, why am I saying this? Is because now, if you can look at this, I'm talking about this area. It's an area of strong demand. And why does it? Why am I saying this? If now you can look at this comparable with candles. If you can look at this, the candle that actually followed this candle, the blue candle, the light blue candle that actually followed, it actually had enough momentum to be able to push the market to actually break the all-time high of which it was this. So this move actually started from this era with this candle. So where I've highlighted right now is an era of strong what? It's an era of demand. It's an era of demand. Let me just label it. Let me just put a template on it so that you guys can be able to understand. So according to me, and according to what I can, era of strong demand, there we have it. So what I can tell from this, it is that, okay, fine, the market was on an uptrend, but the market actually changed from being on an uptrend, not necessarily to a downtrend. But then if now, let's look at the start of the trend. The start of the trend actually happened around here. This is where we actually, this is where the market was creating all those higher highs and higher lows, right? So basically the trend actually started somewhere around here. So if now we're going to draw a trend line from the previous video that I actually created yesterday, I say that we're going to be looking for the first touch and the second touch. So mind you, my first touch and my second touch are going to be these ones. So basically if now I had to draw a trend on this trend, downtrend, it's on an uptrend. I mean like looking over the years and so basically if I was going to low here and then it went to the upside and started playing, I'd be looking for a touch whereby like the market didn't actually manipulate it. So basically it was this area. I'm gonna draw my diagonal support and then I'm gonna when if like I'm looking forward to draw my diagonal resistance, I would have something like this. I would have say. So I'm just gonna drag it all the way to the upside. So basically, yeah, it makes sense. It doesn't bang. Why does it make sense? Because now if now I draw a trend line, I know that I have to draw a vertical line in between so that when I start a trend, also my diagonal resistance also has to start somewhere around here. I cannot go all the way back there. Yeah. So this is my rules. You can have your own rules as well. We have different ways of trading. But then when it comes to trend lines, I feel like it's all the same method throughout. So in this case, this is what I have. So basically, by just looking at the shifted in trends, overall it has been. I'm actually focused. I'm expecting the market to actually, because now it has broken below this era of which it was previous demand. Now I expect the market to actually do what? I still expect the market to actually come back to this era of demand. Never mind you, other people might see head and shoulder. I mean, like that's the way you trade. You might see that the market actually created a head and shoulder there. But then one thing that I do understand it is that the market has never created new highs by just look at actually is to follow what the market has to actually go to an era of strong demand before they can actually go all the way upside to create new highs. This area here, even now I can draw it, let me just draw it like this. This era upside breaking this previous high is much better. This pull to actually make this market actually pull all the way down, continue going to the upside. What I can see. Okay, I'm just gonna I'm using my mind, my knowledge about what I can see. What I understand is that this knowledge that I've been sharing this knowledge for a very long time. Amongst this move, consisting of 1, 2, 3, 4, 5, 6, 7 candles. There's only one different candle of which it is bullish, of which the candle that I'm actually talking. You see a market that actually has been creating the same move. In this case, it was bearish. What does that actually change to be? Now becomes a supply area. So what we had expected is that once the market actually creates something like this, we expect the market to actually go all the way to up there to that area of supply to collect some liquidity before it can actually continue going to the downwards. Same thing applies when we're on a bullish move. It's always going to be the same thing. You're always going to see the market actually doing such. We're always going to see the market actually doing such. Let me look for another example. That I can show you. We're actually talking about it makes sense and it makes full sense. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 candles. 9 bullish candles. 9 bullish candles. There was only one different candle. These ads. One different candle. The only different candle that we actually had, it was this one, of which it was bearish. So what do we do around that era? So it was very much expected for the market to actually do what? To actually come back. Try to come back to that era of demand before it can actually find the momentum. Look what happened when the market finally actually came back to that era there. and then it found that momentum, it just pushed to the upside. You get me? So all of this actually makes sense. It's very, very important. This knowledge that you actually gonna gain throughout the year, because I feel like it's very important. Okay, now for price, this is what I had actually said, that now since the market is in this, now there's an era of supply. So now era of supply, we are going to be looking for shorting entries. But then before you cannot just when the market actually comes in, because now the market can 10 here, can 10 here, can 10 here, can 10 here, can all come all the way up here to 10. So it all depends on what you see and how you actually trade. In this case, I'm not going to be doing my see clearly here. I'm just going to go to, let me just remove this. Remove the so now yeah, it's back. So let me just remove this. If like do a mistake and erase everything, you can always bring it back. Okay. So let's go to our daily time frame. Remember this was negated in actually. Okay. There. So in this case, we have to understand, current trend of which is a downtrend. Why are we saying that it's a downtrend? Because the market has been creating lower lows and lower highs. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Possible lower high? Possible. It's possible. Before we can even see that move go into the downwards. So let me just erase this. Okay. I'm gonna be focusing on it because now we see here the market had actually created that sharp retracement. So now the moment the market actually made that sharp impulsive move, so now it's a possible what? It's a possible retracement. It's fine. Okay, fine. So what I can do move here, I have to form a swing. This trend I traded it, this trend I traded it, but then now the market actually changed structure. Wow, how did it actually change it? The market actually broke it, so broke above the previous structure of the market, the previous lower high, previous lower high, push to the upside. So now it's a change of structure. In order for me to trade whatever that's going to happen, I have to look at this move only. Whatever that actually happened, it doesn't matter much. I'm only focusing on this move here. So what I'm going to be doing now is that, okay, let me just flip trend of the market. It's downtrend, obviously. So my diagonal resistance, of course, diagonal support, diagonal resistance. In this case, I also have my diagonal support somewhere around you. Fine. I think it's fine like that. It's fine. So now I'm going back to this move that I have here. So here, what I'm going to be doing is that I'm going to be drawing my guys, which is important. Yeah, the market, we saw the market actually printing that we saw the market printing that overextended M pattern, that overextended M pattern there. M pattern. So basically we expect the market to actually come back to the neckline before continuation. Remember, when you have a W pattern in this form, expect the market to come back to the neckline before continuation. When you have an M pattern, doesn't matter how the M pattern is, expect the retracement before continuation. You have so many M patterns that you can have. You can have an M pattern like this. It's an overextended because now the highs are not equal. It's also a neckline, so expect the retracement. Most people call this the 1, 2, 3, the 1, 2, 3 move. Basically, it's because we have 1, we have 2, now we have 3. So now expect the retracement here to actually continue going to the downwards. So basically, it's in the form of impulsive move. It's in the form of impulsive move, retracement, impulsive move, retracement, and then finally we have that neckline. And also the W patterns. There's so many W patterns that you can actually have. The lows are not equal, but then it's still a W pattern. Okay. Because now people, there are people who draw a W with equal lows, and then we have those ones, they just draw in like doctors. Then we also have those ones, and then we also have those ones again. So basically, in this case, there are a lot of people who actually draw in different manners. So it doesn't matter how you actually draw it, it's still a W pattern as long it has it has two legs, and then it also has a neckline. So we have a neckline somewhere. This neckline. My Fibonacci. In this case, I'm gonna draw my. So in this case, this is what I have. The E2, my 0.82. Yeah, the market is it possible for the market to actually come there? I don't think so. I don't think we'll actually get there. But then you can only tell. Still fine. But according to this, what if now I draw it like this, lines up there? So what I'm going to do, but then I'll say on a weekly time frame like this, on a weekly time frame like this, impulsive move is this one, and then this is a retracement. A retracement at least is consists of 2 or 3 more candles. You get me? So that's what you have there. My 0.51 there. I'm just going to draw a small line. Just going to draw a small line there. Move my daily time frame. So now I know you going to down. So now when I get this, because now actually I have my pen down there, I for a block there. This is my last lower low. Draw a block. So on my lower low and my lower highs of the previous trend, I just draw blocks there. So now according to this now, because this is now from the daily, I can see, okay, the market is there, but then I feel like the market, before it can actually come down, it will have to move much further to actually that before it can actually continue going to the downwards. So on the daily, this is what I have. And now a and whatnot, this is what you're gonna have, because it's gonna be my what? This is gonna be my higher low. Lower. The market actually breaking that trend line and breaking this lower high. It's about to actually change in trends. It's about to actually change trends, short-term trends actually, not the long-term ones. Because now, since this is what I have here, I took this buy on Friday. So, but then my target was here. But then since now I'm seeing this, I know that okay, the market might not end there, but then it might also here. I can just draw a zone, because now it also works. You know, like I'm gonna draw a zone like this. It's gonna work. Believe me, it's gonna work. You just have to have that. Now, if I look at this, but then this one I'm not gonna call it. Let me remove it actually. I'm not gonna remove it as such. I'm just gonna call it a pivot. It's on the lower low and the lower highs. And this one, I'm just going to remove it now, because now it's also now the market. This is somewhere here. So I'm just going to remove that. This is my pivot zone. If I extend it to the right, you see that, okay, it's a pivot zone. It's a zone where like the market actually leads to touches on is resistant. Also my pivot zone. Simple as that. There. What's happening? It's a process. Whenever like you're analyzing, you actually have to make it a process. You're analyzing in the form of a process. All of this is a process that I'm actually following. It's something that I have learned for us. Because this is why actually times I do take them on. Or now you look at this. What you can see from this is that the market is actually broken the previous lower low that I actually had on the daily time frame with this candle, but then it failed to actually go into there and actually touch that fib level. So hence now we're seeing what hence was a double top and also get into that area before the market can actually come down. Simple as that. Simple as that. So yeah, I'm gonna move this trading that okay, whatnot. So this is there. Support, just manipulation, it turned into support. Simple as that. This is how we actually analyze. Go to the upside, and I don't support drawing this. I'd rather use this like this. I'd rather use something like this, because I feel like that's important. This one, when it comes to sometimes now it did touch it. I need you to be more parallel channel. And then from then you come back to it did to actually come back down here, and it came back down in the channel, because the channel is much better. Even though your channel just slightly covered the week where it actually turned. So in this case, how did I do this? I drew my channel based on this. I covered the week, then I up until the put. Simple as that. That's simple, right? It can be easy for anyone to trade it. When you draw in the form of a channel, yeah. So basically, it's something that's I'm also gonna draw my resistant. My diagonal is okay. My diagonal resistance to say the market might do what? According to me, what I know is that we took this buy the 2-day morning, sink all the way down there. How did we take that buy 2 days buy, the one that actually had? Okay, now since I have that on morning, obviously now I knew that I expect the market to actually what? On Friday the market actually closed with an uptrend. So I know that according to the V shapes, I've taught so many knowledge when it comes to indices, we expect a V shape. Probably from there, one gets there, and then we're gonna see that move coming down. Simple as that. You get me? But then this, it's actually coming from all the V shapes. It's actually a V shape that I actually had anticipated on that the market. Okay, since it closed on an uptrend yesterday, on Friday, today morning I expect the market at least to come back into this zone, and then from then we're gonna have that move go into the upside, of which that's something that we had. So we actually took our first Friday as well. If like you would sort of before prior, you want to see that white back down. And I've taught so many rules on third touch rule as well. This is the first touch, second touch, then finally we have the third touch there. So this was 100%. This move going to was 100%. So if people actually saw that the way they're still into profit, because now obviously we're going to take this trade here, the take profit is going to be, but then once you see that it is actually broken, wait for it to retest, add your trades here, then you continue with it, go into the upside. Simple as that. This thing doesn't want you to confuse yourself. Just know which trend is the market in, and what am I expecting from it, and then how am I going to capitalize on it. Simple as that. And then you're 100% sure of what you're actually doing. And then from here as well, what you saw the market actually broke above here, it was another area to add your trades up until the market actually enters that zone. So guys, from me to y'all, this is Dollar. I'm gonna be back with some of the knowledge. I'm gonna keep on sharing the knowledge. It's simple as that. And also today, hey, I forgot sharing something as well. And it's actually happening. If like you didn't want to, you're just gonna do is that you're just gonna wait for the market to actually break above this, and then just gonna end, because it believes that even though this thing is not a continuation. So what can you expect from this? For people who are late on this trade, wait for the market at least to come back a bit into there. Then you can find your trade to continue with it. But then so far we are holding our trades. And yeah, remember, it gets here on whatever that I shared on. I'm trying to actually show this in a manner. What is it? Freeman. Where's that demand? The ratio is 1 to 29. Just imagine. Just imagine. You can take this trade all the way down there, or you can just put your on your lower low. Simple as that. In 1.7, gaining all the way down there. Sure. Okay, yeah, this was it, guys. This was dollar. I'm gonna be back with the next one. I'm gonna be looking at GMT and Nasdaq. It's working. To subscribe, like our channel, comment. I'll be looking at those comments. Sure, gents. See you on the next one.